Hey folks, can we talk about this wild idea floating around right now? President Trump just dropped this bombshell on his social media the other day. Basically, he's pushing for these super long 50-year mortgages to make buying a house feel less like climbing Mount Everest. I mean, picture this. Back in the day, FDR came up with the 30-year mortgage during the Great Depression to get folks into homes when everything was a mess. Trump's out here like, hold my Diet Coke, we're going bigger, 50 years. And the head of the Federal Housing Finance Agency, this guy Bill Pulte, jumped right on it, tweeting that they are already cooking it up as a game changer to help young people snag that American dream before it's priced out of reach. Look, I get it. Housing right now? It's brutal. I've got friends in their late 20s, early 30s, staring at median home prices hovering around $10,000, with mortgage rates still kicking around 6% or so even after that little dip. They're crunching numbers, and bam, they'd need to pull in over $110,000 a year just to swing the payments on a typical place without breaking the bank. That's wild when the average household's scraping by on way less. Folks are spending nearly 40% of their take-home pay on shelter, which is way over that old-school 30% rule experts always harp on. Rent's no picnic either. But owning? That's supposed to be the golden ticket, right? Stability, building some equity, maybe passing something down to the kids. But with prices up 25% since the pandemic low-interest frenzy, and sales in the toilet because nobody can afford the down payment or the monthly hit, it's like the whole market's frozen solid. So Trump's angle here is straightforward. Stretch out the loan to 50 years, and suddenly those monthly payments drop like a stone. Let's ballpark it real quick. Say you're eyeing a $400,000 house with a 20% down payment. But hold up, I'm not going to sugarcoat it, because that's not how this works. This isn't some magic wand. It's more like slapping a Band-Aid on a leaky dam. Sure, the monthly relief sounds sweet, but let's think long game. Over 50 years, you're not just paying off the house. You're basically writing a love letter to the banks. That extra 20 years means way more interest piling up. In my quick math on that $320,000 loan at, say, 6.5%, figuring it'd tick up a bit for the longer term because lenders aren't dummies, you'd shell out over $500,000 in interest alone. Compare that to the 30 years, $360,000 or so. You're talking an extra $140,000 vanishing into the ether. And equity? Forget about it. In the first few years of a long loan like that, almost all your payment is interest, so you're barely chipping away at the principal. After 5 years, you might have knocked off just a couple grand, while on a 30-year, it's more like 30 or 40. It's like renting from yourself, except with worse decor options. I chatted with a buddy who's a real estate agent down in Florida the other night, and he was shaking his head. Great for cash flow now, he said. But these kids are going to be in their 70s still owing on the roof over their heads. What if they want to retire? Downsize? Hell, what if they pass it on? It's a debt bomb waiting to go off. And he's spot on. Experts are chiming in left and right, calling it a distraction from the real villains. Sky-high construction costs, zoning laws that tie builders' hands, and not enough hammers hitting nails to begin with. We've got a shortage of millions of units, and instead of bulldozing red tape to build more, we're just kicking the can down the road? Nah. Plus, rolling this out means Congress has to gut parts of Dodd-Frank, that post-2008 law, designed to stop another crash by capping loan terms at 30 years for qualified mortgages backed by Fannie and Freddie. Good luck getting that through without a fight. Even some Republicans are balking, like that firebrand from Georgia who's all, "This just fattens the bank's wallets while we die in hock." Don't get me wrong, Trump's zeroing in on affordability isn't nothing. He's been on this since day one, signing orders to cut red tape and nudge the Fed on rates. And yeah, in a pinch, lower payments could thaw this icy market, get some inventory moving as locked-in owners feel less squeezed. But is it sustainable? Doubt it. It might juice demand short-term, sure, but that could just bid up prices even more, negating the savings before you close escrow. Imagine, more buyers flood in, sellers smell blood, and poof, that $500 monthly win evaporates as homes jump another 10%. We've seen it before with low rates. It was like pouring gas on a bonfire. At the end of the day, this feels like tinkering around the edges when we need a full remodel. What if we went big on incentives for affordable builds? Tax breaks for dense housing in suburbs, streamlining permits so towns aren't blocking multifamily units out of NIMBY spite? Or portable mortgages that follow you if you relocate for a job? Hell, even assumable loans could let buyers inherit grandma's low-rate deal without starting from scratch. Those are the wide arsenal tweaks that could actually stick. As for the 50-year pitch, it's got heart, wanting folks to own a slice of stability in this chaotic world. But it's got me worried it's more hype than help. We'll see if it gains legs, but if you're house hunting, maybe chat with a financial advisor before betting the farm on forever payments. What do you think? Lifesaver or loan shark in disguise? Hit me up. I'd love to hear your take.